Today, I want to give you guys a quick peek into my Wealthsimple TFSA. So far, you've had glimpses of companies that may or may not be in my portfolio, and hopefully after this video, you will know a little more about some of the companies I hold and why I hold them. This should be exciting, so let's begin right now. We are going to be looking at my top 10 holdings in my Wealthsimple Canadian TFSA. In my overall TFSA, my Canadian holdings make up 85% of my total TFSA. The top 10 within my Canadian side make up roughly 59.4% of that Canadian side. The percentages I am showing with each of these is for the entire TFSA. Before we jump into stocks, one of my overall goals is diversification, and part of that is to not allow individual companies to take too big of a piece of the pie. Under normal conditions, I try to aim for a 5% stake per company. However, these numbers will move with the market. If the market drops and a stock does better than the others during that drop, it will inflate that percentage. So when I get a company that is out of balance, I just stop dollar cost averaging into them and let time move their percentage back into a better position. If the market is doing well and I have an over-diversified company deep in profit, deep into the profit, I will take some of that profit and get them back closer to where they should be. I am holding these in Wealthsimple, and I love this exchange for all of its features and the commission-free trading, which makes rebalancing so much easier. If you have not tried Wealthsimple yet, check the link in my first pinned comment. Don't be a banana breadhead and pay the big banks commissions to trade. Use that link and get the 2 free stocks for signing up, which is free money, and it also supports the channel. My 10th biggest position is Canadian Western Bank with a ticker of CWB. They currently hold a 3.3% position in my Wealthsimple TFSA. They are currently down 12.76% in my portfolio. You are going to see a lot of red today, and that is to be expected with the current market conditions. This is going to be one of those bigger drops, only because they are a newer addition to my portfolio. On the pro side, I think they have a lot of growth potential, and their fundamentals are very solid. On the con side, they are not a big 6 bank, and they technically are not blue chip. Thus, there is greater risk with them than with one of the big 6. My 9th biggest position is eSplit Cores with a ticker of ENS. They currently hold a 4% position in my Wealthsimple TFSA. They are currently down 10.70% in my portfolio. They are also a newer addition to my portfolio and have been doing well until this week, which really hurt their share price. However, their dividends are fine, and the fact they are 100% invested in Enbridge, I have some faith in them rebounding. On the pro side, I think the oil boom still has a good amount of gas left in the tank, and I am willing to ride this share the distance. On the con side, they are a split core, and that can come with extra risk. I don't feel like there is anything to worry about with this one, but they will always have some extra attention from me. My 8th biggest position is Inovalis Real Estate Investment Trust with a ticker of INO.UN. They currently hold a 4.1% position within my Wealthsimple TFSA. They are currently down 10.12% in my portfolio. They have been doing okay until the last few weeks, which of course hurt them just like it's been hurting everybody else. However, their dividends are still fine, and so far there's no real concerns with the stock. On the pro side, I think the overall trend is for office workers to return to the office, and this is a good thing for an office REIT. On the con side, real estate has been crazy, and there could be some future volatility in the overall market. If I see that happening, I will absolutely reevaluate my faith in this REIT. My 7th biggest position is BCE Inc. with a ticker of BCE. They currently hold a 4.8% position in my Wealthsimple TFSA. They are currently down 9.32% in my portfolio. They are the first of my blue chip companies, and despite the downturn in the market, they are positioned well to survive a recession. On the pro side, I think Canada's 3 big telecommunication providers are so well entrenched, they are more than likely guaranteed to succeed on longer term investments. On the con side, they can be at the mercy of legislation and the CRTC. So far, they have always managed to come out on top, but that is always something I will follow just in case. My 6th biggest position is Crescent Point Energy Company with a ticker of CPG. They currently hold a 5.0% position within my Wealthsimple TFSA. They are currently down 9.25% within my portfolio. They are the second of my energy plays. They are also a newer addition, which is why they are down so hard as energy fumbled this week. I am expecting a recovery, and they will be a stock I DCA profit out of as the energy boom comes to an end. On the pro side, they can move fast in price and can be very reflective of the boom. There is money to make here, and I am patient. On the con side, they can move fast in price, which also means after the boom, they could be a stinker for a while. Being over-diversified in energy, they are slated for eventual sale. My fifth biggest position is Purpose Bitcoin Yield ETF with a ticker of BTCY. They currently hold a 5.1% position in my Wealthsimple TFSA. They are currently down 36.43% in my portfolio. Holy banana bread. This drop hurts my soul a wee bit, but yet they are still paying their dividends, though they did scale them back a tiny bit. They are still one of the better dividend yields out there. Ironically, that dividend replies on Bitcoin going up or down. So that scale back of the dividend was from all the sideways movement Bitcoin experienced before this current drop. On the pro side, their call option strategy should keep this dividend alive, and when Bitcoin climbs again, so will the price of this ETF. On the con side, they are a new ETF, and Bitcoin is still schooling investors on what it will or will not do, and that can add an extra layer of risk to the spot ETF. My fourth biggest position is Tourmaline Oil Corp with a ticker of TOU. They currently hold a 5.5% position in my Wealthsimple TFSA. They are currently down 6.23% in my portfolio. That drop is pretty much entirely from the last week, and I expect to be back in profit before the end of the month with this one. On the pro side, they are a very solid oil company, and I would consider them to be blue chip. This is a company I will hold on to after the oil boom. On the con side, they will fall after the boom, and you could be looking at a longer price recovery time, which is absolutely fine if you are on a long-term play. My third biggest position is Fortis with a ticker of FTS. They currently hold a 6.5% position in my Wealthsimple TFSA. They are currently down 3.23% in my portfolio. That drop is entirely from the last week, and like Tourmaline, I expect to be back in profit before the end of the month. I will also add, this is the first stock I have ever bought. On the pro side, they are a very solid blue chip dividend aristocrat that is quickly moving towards becoming Canada's second dividend king. On the con side, they are not an exciting stock, but because of that, they will be a great long-term choice. My second biggest position is Canoe EIT Income Trust with a ticker of EIT.UN. They currently hold a 9.1% position in my Wealthsimple TFSA. They are currently down 8.72% in my portfolio. That drop is 100% from the last week, and I think it is one of the few times I have seen this fund not be in the green. On the pro side, they have terrific dividends and have a track record of stability and have been booming with the oil sector. On the con side, they are a stock that has tax implications if you hold them in a non-registered account. My biggest position is Canadian National Railway with a ticker of CNR. They currently hold a 12% position in my Wealthsimple TFSA. They are currently down 2.94% in my portfolio. They have, for the most part, not reacted as poorly as many other choices to the current market conditions. In my opinion, this may be one of the bluest chips out there. On the pro side, they are a recession-proof integral part of the supply chain with a track record, no pun intended, of cruising through recessions, and they are a company I have never worried about ever. On the con side, their share price is a little on the higher side, and you are not going to get a ton of dividends with them, but there is consistent growth, and you can buy them fractionally on Wealthsimple. With the massive drops we have seen in the last week, I can absolutely say that I am entirely in the red, and that is okay because I have not lost anything. You are only in trouble when you sell and realize those losses. I do have some diversification issues in my portfolio, and that is my over-diversification into energy. That was on purpose, and my goals between now and when we look at my portfolio the next time we do this is to get some of those numbers back where they should be. Of course, if looking at my portfolio is inspiring some of you, remember to only be inspired to do more research. I am only the beginning of that process, and your financial advisor is the end. If you guys loved this video, be excited. There is way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.